Okay, so this is the second part of the video for sales receipts. We already did all our journal entries. It was super long, 30-minute video, but we got it done. And now we're going to do our accounts receivable subsidiary ledger. So we had four individuals for accounts receivable, and so we want to keep track of their balance now that we've recorded all their journal entries, related transactions for the month of August. We did have some beginning balances, so we're going to put that in for August 1st. So the first one we got to scroll all the way up. The first one we had was Kane's beginning balance. So all our beginning balances were here. I wrote them down on my scrap paper for myself so I don't have to scroll all the time. But this is where those beginning balances are for them. And then you should see that if we added up all of these beginning balances, these four beginning balances, let's do that. That will be the total of our accounts receivables beginning balance. All right. So those, all four of them added up. Look at that. Accounts receivables balance, 2,375. Good, we're ready. All right, so that will be the grand total for the ledger, but we have our subsidiaries of these four guys, and we want to keep track of what's happening. So how are we going to do that? Well, we're going to go look for them all. So we see if there's a receivable increase on the 3rd for 600 bucks. So we're going to add that in on the T account for Kane. And we can see that Dylan has one for 400 and Gil has one for 100. So we're going to keep taking those all out. And so instead of making you go dizzy, I'm going to go ahead and do some of them, and then I'll point out where some are as well. So we'll just do maybe Kane together, and then the rest we'll complete. All right, so let's do Kane's beginning balance. That was 375. And let's just do only Kane. So we're going to go up to, so we can see I already marked in the dates for us, but normally you would mark that in as well. So we had on the 3rd, which was that first transaction that we had to record. So we got to scroll all the way up. Right here for 600 bucks. All right, so that's a debit. Well, that makes sense. Okay, yeah. So we're going to record our debit. And then we know they did make a payment and they got that discount, right? So we're going to record that $600 debit right here. And then they had where they made their payment. And so we're going to go and it should be for this full 600, but let's just double check. Um, and make sure, but that's what it should be. So hopefully we did our journal entry right and have the full amount. Yep, there it is. Accounts receivable Kane, 600 credit. Perfect. And so we are actually done with Kane, but you would go look to see if you see any others. That's Dylan, for example. And you would go and record them all in there, okay? So we can see that the larger balance is on this side, right? So we have 375 plus 600 minus 600. Oh, ending balance is 375. Okay. So you're going to go ahead and do that for Dylan, for Figs, and for Gil. And then we're going to return and we're going to finish our general ledger for the accounts receivable. Okay, so we can see that everybody else was completed. I went ahead and completed them. I rolled up and looked at all their accounts receivables and recorded all their transactions in, got their ending balances. And so now I have all four of them. And so my ending accounts receivable balance should be all four of theirs added up, their ending balances. So we're going to do that as a double checker. But we have our general ledgers that we're going to do. And so the problem that you're working on probably has you do it for all the accounts, for cash, for merchandise inventory. So you're going to just keep going, scrolling, looking at all those journal entries and recording what happened to all of them. We're just going to do accounts receivable because that's what we're concentrating on, what we're learning right now. So you're going to go all the way back up and record the beginning balance for accounts receivable on as of August 1st. That was in the description, and that was 2,375. Okay, and then you're going to go look and you're going to see where all your other accounts receivable transactions happen. So all of them, Kane, Dylan, Figs, Gil, all of them are there accounts receivable, that's where you're going to start recording. So if I can get all the way back up here, I'm not going to show you all this, going through all this, because I'll just give you a headache with all the scrolling. But you can see accounts receivable came for 600 debit. So I'm going to record that in my T account. That was August 3rd. And I'm going to keep going and say, okay, where's my next one? Oh, August 4th, Dylan, 400. Keep going, keep going. August 9th, debit again for 100. Keep going. Oh, credit on August 10th for 600. So I'm going to keep recording those all on my T accounts as I keep going. So let's go ahead and fill out that T account real quick for you. And then we'll finish our schedule of accounts receivable. All right, so here they all are. They're all entered in, and I added up my debit side, and then I subtracted my credit side, got a remaining debit balance. That makes sense because accounts receivable is an asset. It should have a normal debit balance, and so that balance is 6,105. That should be all four individuals added up as well. So let's go double check. So we can do this little schedule to double check, or we could have just done our calculator, but we see Caden's ending balance is 350, Dylan's is 4,530, 450 for Fix, and then 750. All right, so we'll just put those all four in. So 375, 4530, 750. I know it's not formatted nicely, but we'll survive. Add those all up. Oh my goodness, really bad formatting. Add those all up, and then we get 6,105. Hey, that's my total for accounts receivable at balance. I'm happy. And so that is it for the subsidiary ledger and the general ledger. So we see that it's subsidiary just broke out the accounts receivable by each business or individual that owes us. And then it should tie out. And we do want to make sure, in accounting we're crazy and want to make sure everything ties and balances. So we should make sure that we balance and tie out before we move on to next month. Okay, so that is it for this problem.